What's going on, everybody? It's Stas here. So the stock market got completely decimated today. Very ugly day out there. S&P 500 down about 80 points, down 2.4%. The Dow Jones down over 500 points, down almost 2%. And the Nasdaq went down 350 points, down over 3%. Same thing with the Russell, down over 3%, down 45 points on the day. So very choppy, ugly red day today. And in this video, we're going to be talking more about the stock market, breaking down some technicals, going over the top stocks that I'm actually looking to buy during this sell-off. And I also want to go over, in my opinion, how much lower the stock market could go. Is it 5% lower from here? Maybe 10% lower? Or are we getting ready for another bounce back in the market? And I also want to share with you guys what I personally did today. And let me tell you, I didn't do much. I only added one little stock here, a little bit into my existing position. So a lot to talk about. If you guys find value, I'm sure you will, hit that like button for me, subscribe to the channel, and make sure to join all of our free groups, the Facebook group, the Discord group, link down below. And if you guys want one free stock from Webull valued up to $1,600, that's also linked down below. So without further ado, let's get into it and start talking about what the heck happened today, guys. And if you guys saw my video yesterday, we talked about, and even the title of the video was, is the stock market in a bull trap? Well, it seems like it is. It was in a bull trap. And let's get into that a little bit, right? That's what we talked about yesterday as we saw the S&P, Nasdaq, Dow, and the Russell. I believe all four of them saw a bounce back day yesterday and the day before, right? We saw the S&P hold 3220. It was very, very oversold at that point. It saw a nice rally, and into yesterday as well, it saw a nice rally. And we talked about how 3330, that is a big level of resistance on the S&P. And if we don't break out of that level, we could potentially see a lower price in the S&P. And take a look. I mean, 3330 was a rock solid support ever since the 4th of September. We held it once, twice, 3, 4, 5 times pretty much. And the fact that we did not end up breaking out of it and we started to sell off aggressively this morning in the open, you guys can see here on the intraday chart, that told me that it's most likely a bull trap. And what is a bull trap, right? A bull trap is when we see a rally in the market, in an index, in an individual stock. It doesn't really matter. It's kind of a term that's used across different markets, but it's when you see a rally in the market, it brings in a lot of buyers thinking that the market is going to reverse for good, and then all of a sudden, it kicks you in the face, which the market does that a lot, and it goes lower, right? So it pretty much sucked in a lot of buyers in the top here yesterday before we actually got out of the downtrend, and it just continued the downtrend. So it's kind of like a fake out, right? You get in thinking it's going to break out, but it just goes lower. That's exactly what we're seeing right now. And in terms of the S&P, tomorrow is going to be such a critical day, guys. And honestly, these next 2 days for the market are going to be extremely critical because, take a look, we actually closed right at that level of support from 2 days ago, right around 32.30. We actually closed at 32.36 exactly. So if we end up taking out this low tomorrow, that's going to be a lower low in the downtrend, and we could be going maybe not a lot lower in the S&P, but we will be going lower. It depends. It depends how much. Well, we don't know how much it's going to go down, but if we break this 32.30 level, if I draw the next big support that I'm seeing, I mean, it's going to be around, let's say, 31.30. So that could see, the S&P could see from 32.30 to 31.30, maybe another 3% drop, roughly 100 points there. That would be the next gap down that we could be seeing on the S&P. And let's say we do end up holding 3330 tomorrow. That's also a possibility. If we do, we might be able to see another bounce back, similar to what we saw yesterday and the day before. Maybe from 3330 down to about, or rather up to about, from 3230 up to about, let's say, 3290. That could give the S&P maybe some upside of around 1% if we do end up seeing a bounce back day. But honestly, guys, I'm thinking, the second we break under 3230 tomorrow, if that happens, there might not be a bounce back. We might just see straight up another drop in the market, as we've seen it before, right? Every technical support that's broken beneath of, we've gone lower. So that could bring even more bears into the market. So for that reason, you have to be careful. I'm being very careful. I'm not going crazy with my positions at this point. I have a lot of cash because I think we could be going lower here. I'm actually leaning more towards us going lower in the short term, and I'm not opposed to that. I'm kind of happy, right? The markets have been crushing it. We are bound for a little bit of a sell-off, and all sell-offs, guys, it's just a healthy pull down. That's what they are for the most part, unless the markets are collapsing, similar to what we saw back in March, February. That's kind of different. At this point, I don't think we're going to see a massive free fall like that again, unless we get some crazy spike in the you-know-what, maybe a second wave, whatever, that could cause it. Maybe we see another shutdown. Maybe that causes another drop. But the truth is, yeah, we're down about, let's say, 8-9% off the highs here on the S&P, but I don't see us going extremely low, a lot lower from here. The worst I can see it get at this point is maybe 3130 on the S&P. From there, if that breaks, maybe low 3000s. And at that point, I'll be honest with you guys, I'm going to be loading the boat on a lot of different positions. Maybe some ETFs involved with the S&P 500 just for some diversification. Maybe some more individual stocks, which if the S&P were to get that low, the individual stocks will most likely follow as well. And some of those include, Google. I'm very interested in adding a lot more at this point. Maybe even Apple, Amazon, companies like this, right? If the S&P were to drop, they're likely to follow since they are massive companies that really swing the entire market. So take a look here on the Dow. The Dow, let's pull it up on the 5-day, 5-minute. Dow Jones ended up breaking under 27,000 bucks today, closed right around that support from 2 days ago at about 26,700. And same thing that I said on the S&P applies here to the Dow. If 26,700 breaks, watch out for below, guys, because we're going to be heading lower in my honest opinion. From 26,700, we might be going down to 26,400. If that level of support breaks, we could be going down to maybe 25,800. And do you guys remember that head and shoulder we called out on the Dow Jones in previous videos? Well, it's playing out perfectly. Take a look. The left shoulder, the head, the right shoulder started to form as we got rejected again at 28,200 a couple days ago. And the second we broke 27,400 and now 27,000, that is really the completion of the right shoulder. And the second we take out 26,700, we're going to be going down, like I just said, guys, anywhere from 25K, mid 25Ks to maybe 26,000. So be careful. There could be downside. And like I've been saying, I don't think we're quite out of the woodworks yet. There could be a lot more, maybe not a lot more downside, but if we saw maybe 5 to 7% more downside at this point, I wouldn't be too shocked. That would put the Dow Jones, down about, let's say, 12, 13% from its highs if we were to drop another 5%. The S&P is going to be around, let's say, 10, 15% down from its highs as well, more like 13 to 15%. And you guys know anything above 10% from the top in terms of a sell-off is considered a correction, but anything above 20% is considered a bear market. So I think we're going to be right around that 15% drop, which is very healthy, especially since the markets have done extremely well. I mean, the Nasdaq has almost doubled, guys, from that low back in March. Like, you can't make this stuff up. It's done extremely well, so don't freak out. This is simply a healthy pull down in my personal and honest opinion. Take a look here on the Nasdaq. We broke 11K. That is not a good sign, but we're still trading above 10,670 to about 10,700. If that ends up holding, maybe we see a short-term rally, but the looks of it are we're going to see more downside. That's what the technicals are telling me, especially as we're getting rejected here on the hourly chart right by that 50 SMA at a lower high. And the second we get under 10,700, you guessed it, guys, it's going to be a lower low in the downtrend, and we might be going, let's say, on the Nasdaq, mid 10,000s. 10,400 is a nice little buy zone here that we saw back in the beginning and really in the entire month of July. 10,400 was bought up a lot here on the Nasdaq. You guys can see it held it pretty nicely. So if 10,700 breaks, watch out for 10,400. If that breaks, watch out for low 10,000s. And at that point, we're going to see a lot of blood in the water for tech, and we might see a lot of we will see a lot of tech stocks at more attractive valuations. And again, I'd love to pick up some more Google, Amazon, Apple, maybe even a little bit of Facebook, as well as I do own, well, at this point, guys, I own pretty much all of the big tech names other than Netflix. So I'm interested in buying into more of those as the Nasdaq continues to go down. And that's just the God's honest truth here. And similar to the Dow Jones, you guys can see the head and shoulders playing out here on the Nasdaq. Left shoulder head as it ran up to mid 12,000. And now as we've been selling off, we're making that right shoulder. And the second we hit under 10,700, again, watch for that gap down for the completion of that right shoulder. So overall, at this point, guys, I think the markets could be going lower, quite honestly. I'd give it maybe, and I'm not Nostradamus, I don't know everything, I don't have a crystal ball, obviously, guys, right? But if I were to guess, I can see another 5, maybe 10% tops downside from here, and it's not the end of the world. Don't freak out. That's why people have cash and why I always advise you guys, even though it's not financial advice, to have cash. It's smart due to opportunities, well, due to circumstances like this. When the markets are going down, you'll be able to take advantage of the opportunity. So let me know in the comments, what are your thoughts as always when it comes to the overall markets and just thoughts in general. What are you guys doing? Now let's talk about what I'm involved with. And you guys know, for the most part, I've been saying this every day on the channel, I'm in a good amount of cash, roughly 40-50% in my main trading account, but I do have some positions at work. And today, speaking of work, Workhorse got hit the hardest out of pretty much any stock in my watch list. It got hit 17% almost. It was down $4.50. And did we not say this? I mean, I don't like tooting my own horn, but I've been talking about Workhorse being pretty frothy, overbought at $31. And I've said, and you guys know this, especially if you pay attention to my videos, I've said, watch out for $20. I think it could sell off, find a nice base at $20, maybe consolidate for a couple weeks before running up. So I'm all for this. I'm loving the sell-off here on Workhorse, but unfortunately, guys, I ended up getting filled at $25. So yeah, I'm down a little bit on that position that I added today. Obviously, as the stock is trading in the mid-22s, I'm down about $2.50 on that position, but on the flip side, I actually already had shares at about $23. So in all actuality, I'm not down much because I was in at 23, added a little bit more at 25, bringing my average cost, I think it's somewhere, I have to double check, but it's right around 24-ish. So I'm down a little bit, but I'm not freaking out. And quite honestly, if it does get to 20, which is possible, and we do find some sort of base consolidation there for a couple of weeks, I'm going to add more. That's for sure. I've already made my mind up. I'm going to be adding more Workhorse in the 20s, and if it gets into the teens again somehow, I'm going to just go heavier. That's just the truth. And this is one of my more speculative positions at this point. And when we talk about speculative positions, guys, the key thing is not to risk money that you're not willing to lose, right? Don't go all in on speculative positions, because if they don't turn out, you're going to lose your shirt. So what I recommend is, and again, this is not financial advice, what I recommend is going in with a small amount of your portfolio into companies like this. And this is a bit speculative because a lot of the hype around it is riding on this USPS contract, which I'm hopeful for. I think they have a very good chance of getting all, if not some of the contract. But the truth is, if they don't get any of the contract, which is possible, the stock in the short term could get crushed. So that is where the speculation is coming in. And you guys have to realize that before dealing with Workhorse and any other companies that are a bit risky and a bit more speculative. They're not 100% certain, right? And another two stocks that I'm still in Apple and I'm still in Amazon. Apple, I'm in at about mid 110s at this point. I added more on Friday at 108.50, and I'm waiting to see tomorrow if we do get lower prices in this market, which could happen. I mean, take a look at the futures, guys. I almost forgot. The futures are down even more. I mean, the Nasdaq futures are down 90 right now. Dow futures are down 120, and the S&P futures are down about 18 bucks, 18 points. So if we go lower tomorrow, and even Apple after hours is at 105. If we're able to get Apple, if I'm able to get Apple at 100 or even under 100, I'm going to add even more money to it. So I'm very confident with Apple in the next couple of months. Same thing here with Amazon. I'm actually in at about $3,010 on Amazon. I'm actually break even at this point. Today, Amazon was down 4%, and the lower it gets under 3,000, 2,800, 2,700, 2,600, very similar to Apple as it goes down. And as these other tech stocks go down that I own, I want to add more to my positions, right? And if it somehow gets to 2,500, I don't know if it will, but I'm going to go super heavy into Amazon at that point. And another thing worth mentioning, I almost forgot, Apple got downgraded today. I believe, I forget who, I think it was UBS potentially that downgraded them. So they downgraded. They actually went from neutral. Actually, they went from buy to neutral from UBS. And actually, no, wait, am I reading that wrong? Hearing UBS earlier downgraded Apple to neutral. Yep, it went from buy to neutral. So that maybe freaked out a little bit of investors. Not me, to be honest. I could care less what analysts say. And you guys have to realize, and not saying that analysts do this, but a lot of the time, they manipulate you a little bit. They might downgrade a stock so it could go lower, and then they're just buying shares on the back end. You know, you have to realize that the stock market, it's a crazy game, and a lot of not shady things go on. I'm sure a lot of shady things go on, but a lot of things behind the scene go on to sometimes shift around stock prices so the big boys could come in and scoop up shares. That could be a possibility at this point in time with a lot of these stocks out here. So let me know in the comments, what are your guys' thoughts? As always, I would love to know. Now let's talk about some other stocks. NEO is very interesting to me. The closer it gets to $15, $16, we're seeing a lot of the EV plays today get crushed. I mean, we already talked about Workhorse down 17%. NEO down about 7%, and a bunch of other ones got crushed. You know, Nikola, which is a pipe dream. That company is just, it's looking very ugly there, down 25% today. You know, a lot of these got hit, and NEO being a legitimate company, unlike, you know, Nikola, I'm looking at NEO anywhere from 15.50 as a pretty strong buy, quite honestly, with potential to get back up to the high teens, maybe back up to 20. So I'm looking to take advantage here on NEO. I'm liking it, especially as it gets closer to that 180 SMA here on the 4-hour chart. And like I mentioned earlier, it's no hiding it. I'm loving Google. I'm loving Google, guys. This is one that I actually picked up in the 1500s. I bought more, I think, yesterday in my M1 Finance account as well. And I'm thinking Google has a real shot to get down to 1300, maybe 1350. Notice how that's a pretty big buy range on the stock, stemming back from the middle of May. It got bought up at 1350. Also in the middle of June, it got bought up around the same spot, and in the end of June. So I'm thinking if we somehow gap down another 50 points on Google, it's going to be a nice bounce back play. It's going to hit oversold territory, lower low territory, and from there, we're going to see a bounce back. And that's true with a lot of these stocks. Remember, we're not just going down, down, down. We're seeing a lot of zigzag patterns. Like I said yesterday, we're going down for 2 days, followed by maybe some up movement for a day or two. So if we get oversold in the markets again, with another big red day tomorrow and Friday, let's say, we could end up picking up some shares on these tech names at oversold spots for maybe short-term bounce-back plays. And Google is in that category, Apple, Amazon, a lot of the big names. I'm looking for exactly that, right? And Tesla. Oh my goodness, guys. Tesla did not do well today. And we talked about Battery Day in a video I uploaded earlier today, so make sure to go check that out. I'll link it down below in the description box. I guarantee you guys will find value in it, so don't miss it. But we talked about Battery Day, the implications of this long term, my thoughts on the stock, and in all honesty, guys, in the short term, like I said in that video, I think Tesla's going to be volatile, especially heading into earnings. And we notice how historically, I don't know if it's every time, but after events, Tesla usually sells off a bit. So I'm not too surprised. It was down about $45 today, down over 10%. After hours, it's down from 380 all the way down to the mid 360s. So I wouldn't be surprised if Tesla were maybe to get down to 340, maybe 350, and if that breaks this level of support that I just drew for you guys here on the 4-hour, maybe we go down to 300, which it got to after the split. It went from 530 to about 308 after the split. So if 340 breaks, hey, watch out for 300 on the bottom side. And again, check out that video where I go more in depth on Tesla. If you guys want to hear my full opinion on Tesla stock right now, I'll link that video right down below. So two other ones that I'm watching, J&J, they're going through some lawsuits right now. And the truth is, when are they not going through lawsuits? I feel like J&J and the banks are always getting fined. JP Morgan, Bank of America, Wells Fargo, they eat $5 billion fines for breakfast, and Johnson & Johnson is the same. And this is one that it's not really breaking out. And at this point, guys, let's be honest, what stocks are breaking out? They're all pretty much downtrending, but the truth is I like Johnson & Johnson in the mid 140s. It actually pulled a green day today, up 23 cents, up 0.16%, showing the strength in the overall market weakness, which I love. So I'm interested in maybe a short-term play from 144, 145, maybe back up to 148, 150. If 150 breaks, maybe back up to the mid 150s. And mind you, they are reporting earnings in about 2-3 weeks from now, so that could really shift the stock. But in the short term, kind of as a lower volatility type of play, Johnson & Johnson has a low beta. I'm not exactly sure what their beta is, and if you guys don't know what that is, it's kind of how volatile a stock is compared to the market, right? It's not that volatile, so we might see this as more of a stable play as the markets are going bananas. But then again, anything could happen. No one knows exactly what's going to happen. So the last one here is Microsoft. I'm liking this one. The lower it gets, under 200. If we get to 180, 175 somehow, 190 even, Microsoft is super attractive at that point, right? And it's looking to get down to, let's say, say mid 190s at this point, especially since we closed under a big 202 level of support. So watch out for Microsoft tomorrow at 196. If that breaks, we could be going even lower. I mean, take a look at some lower prices here on Microsoft, maybe down to about $190. And another bonus one here, why not? It did very well today, was Upwork. And we called out Upwork. We've been talking about how if this thing breaks above $15.80, $16, it's going to go off to the races. And we saw a glimpse of it today. It went from $16 up to about $16.40. Now we're pulling back down to about $15.80, $16. So if this holds as a support tomorrow, we might see a nice rally in Upwork again, maybe back up to the mid-16s, maybe $17, despite the markets getting hit. And you guys can see, it's up despite the markets going down, which is a good sign that it's, it's kind of going against the grain, right? So I'd love to know your thoughts on everything down below in the comments. What do you think about the markets, where we're headed? What are you guys personally doing? I would love to know. And that's pretty much it. If you guys found value in the video, hit that like button for me. Make sure to subscribe to the channel. We're on the road to 20,000 subscribers. And again, leave that comment down below and feel free to join the Strive Smart Discord chat Facebook group, free of charge to join, link down below in the description box. And you can also claim one free stock from Webull valued up to $1,600 with a deposit of $100, also linked down below. All you have to do is deposit $100, you get a free stock, and I also get a free stock, which since it is an affiliate link. So I'll catch you all in the next video. Don't forget to check out that Tesla video. Click on it right here. It's somewhere up here and also linked down below. Thanks for watching. Stay safe out there, guys. Peace out.